Good afternoon, everybody. Thank you for being here in large numbers for this session, which may seem rather technical. We're going to talk about blockchains, Uberization, cyber currencies. Might seem a bit technical, but sometimes it involves our sovereignty. So I think it's a very interesting subject. We'll try to be as concrete as possible. And if our speakers do not do that, I'll try and remind them to make it accessible to everybody. And we'll talk about these innovations which are gradually entering our wallets, whether they're real or virtual, to see whether they're really providing us with new services. We're talking about disintermediation. We're going to explain what that is. And there are banking intermediaries, as you know, but increasingly there are other intermediaries in different companies, different platforms as well. So to give an introduction to this subject and to talk about this subject, we're going to hear from Helene REY, who is a professor of business at the London Business School, who is representing the Cercle des Économistes here and is coordinated this session. Then we will hand over to Dan Schulman, who is joining us by video. I hope you can hear me. Hello, Dan Schulman. I hope you can hear us. Apparently he can. Great. Okay. He is the former boss of PayPal for a certain number of years, for 9 years, in fact, during which the sales figure tripled. Then I will hand over to Daniel BIARNEIX, hope that's the right pronunciation. Daniel BIARNEIX, who represents the French Association of Business Treasurers. Then we have Maya ATIG, who is the General Manager of the French Banking Federation, FBF. Hello to you. And then we have Mingpo CAI, who founded Cathay Capital, a major private equity company, 6 billion euros of assets, including and also involved in a large number of technical innovations in the financial sphere. And then we had Edouard VIEILLEFOND, who is the Managing Director of CCR, which is the Central Reinsurance Fund. And that's everybody, I think. So I'll hand over straight away now to Helene REY for the introduction. Thank you very much. Hello, everybody. So libertarian ideology is floating over finance with Bitcoin and also the other cryptocurrencies. They were invented to disintermediate governments and central banks in particular. But the question now has to be asked, why should we trust these new private sector players who are replacing the governments and the central banks in the area of currency? Bitcoin is the best known cryptocurrency, and it's the one that has the largest capitalization, and it's a cryptocurrency. When you look at Bitcoin, you realize that it is actually a currency which is not a very good currency, in fact, because in terms of the quality of the currency, we need to have low transaction costs. That is not the case. The transactions in Bitcoins are very expensive, and also they're very intense in terms of very energy intensive, and the cost of Bitcoin is very volatile. So it's not really a currency, although it's called a currency. It's really an asset, which is incredibly speculative. Cryptocurrencies can be used and have been used already to get around regulations. There are illegal transactions. There is use of the dark web connected with cryptocurrencies. But in parallel to these innovations linked to cryptocurrencies, we have other innovations. For example, we have other means of exchange, which are what we call the stable coins. These are currencies whose exchange rate is fixed in relation to a normal currency. In other words, in practice, this is the dollar. So the stable coins are currencies which have a value which is fixed in relation, let's say, to the US dollar. And these currencies are used, for example, for international payments, partly by companies such as PayPal and MasterCard and Visa Card, who use them for their international transactions. These are currencies that go backwards and forwards between the traditional currency system and this new system. And as they go backwards and forwards between two, they use these exchange platforms such as Coinbase and Binance, which occasionally are rather opaque and are not very regulated. So the question is, what are the advantages of these new means of payment, and more broadly, other technologies linked to them? We might think that on the one hand they can lead to reductions in costs thanks to these new technologies, and because they're attacking the monopolies of the banks and they're attacking banking rents. But they also have other effects on the stability of the financial system. There are perhaps costs and disadvantages we need to look at too, and perhaps we could also imagine that all of the international transactions might use stable coins in dollars in the medium term. That's possible. Stable coins issued by private sector entities. In that case, the consequences would be quite considerable for the international currency system and also potentially for geopolitical balances. We can see that in parallel to all this, we have the development of other technologies that are linked to this. Blockchain, it was very much linked to Bitcoin, but we also have tokenization, smart contracts as well. These are contracts that are intelligent. We also talk about Web 3.0. These are terms that are very fashionable, very trendy, and quite technical. And I hope that in the panel we'll be able to make this understandable to everybody, and we'll be able to explain what they actually are in a fairly concrete way. What are the advantages for society of these innovations, of this disintermediation? In particular, it would be nice to hear from our panelists what are the advantages for people like you and me, and also for non-financial companies. I always ask my students, what is business case for disintermediation of finance? And the answers they give me are always rather vague. Is it really important to be able to do financial transactions 24 hours a day, 7 days a week? Not necessarily. It would also be a good idea if the panel could, if they can, give a concrete example of a smart contract which is used and which is useful in the intermediated finance and in the real economy. These are not easy examples to find. In addition, we have other questions that can be asked about the use of user data, who stores it, who can use it, can it be sold, and also what happens in the event of the risk of a cyber attack, which has become a very real risk for many companies, most companies in fact. What about traditional banks? We have some representatives of these traditional banks. Are they trying to take control of these new technologies? For example, in these new technologies, we have AI as well, which can give microcredits. In China, we've seen the development of companies such as Ant Financials, which gives micro loans to people who didn't have access to loans before by using increasingly sophisticated AI software. In addition to the central banks, we also see that they were afraid of being left behind because of this new technology, and that is why they have started to experiment with the CBDCs, in other words, the central bank digital currencies, which for the time being seems to be a defensive position rather than anything with a strategic objective from the point of view of the central banks. But in any case, all of the central banks have started to issue these digital currencies. A lot of the central banks have started to experiment and try to see how they can design a CBDC. Does it have to be a retail currency or a currency more for commercial banks? There are a lot of questions being asked about the structure of the financial system and the role of commercial banks. So finally, I think there's an opportunity cost, which is quite high in developing these new technologies because they require a lot of talent, especially scientific talent, and also in terms of computational power. They need a lot of energy. They also require a lot of capital. And the question has to be asked, wouldn't these resources be better used to fight against climate change? Thank you, Helene. I'll hand over straight away now to Dan Schulman. Dan Schulman.
You've been managing PayPal for 9 years. Was it really useful for the people?
You mean to manage it or PayPal itself? Look, I think there's a lot to discuss, and I agree with some of what the previous speaker said and disagree with quite a bit of other parts of it. I think there's a saying in the world that it's expensive to be poor. I think that's especially true in the financial services industry. Transactions that for you and me are essentially free cost a tremendous amount for those who have less money. So if you don't have a bank account, if you can't get credit, you need to pay your bills in person. The costs for every transaction, if you have to cash checks, it costs you to go do that. And the system has, I would say, antiquated rails today that keep transaction costs high, and also is to some extent exclusive as opposed to inclusive. And it takes at times days to do a transaction. And when you are, when you have less money, every moment counts. It isn't that your cash inflows are less than your cash outflows. It's just there's a timing mismatch. And so instantaneous payments is extraordinarily important for a large part of our population. And the new technologies that we're talking about, and most of them are misunderstood. People conflate cryptocurrency with altcoins, Bitcoin, Solana, Ethereum, blockchains, CBDCs, stablecoins, and they're all fundamentally different things. Like Bitcoin is never going to be a currency. I don't know why we even talk about it as a currency. It's a store of value. It may replace things like gold or silver. I personally think it will do that. I think its price can go up 5 times from where it is today if it takes half of that market, but it's an asset class only. Altcoins, they're never going to be currencies either, and most of them are scams. Blockchain is a massively efficient infrastructure for doing transactions, but every blockchain is different. The Solana blockchain is perfect for payments. You can do payments at 1/1000th the cost of a transaction. It can be instantaneous and very inclusive as well. And so you can lower costs, drive inclusivity into the global economy, and make transactions much more efficient. That's really what a lot of governments and central banks and private industry and the banking sector are trying to do. This is not ever going to be for companies of some scale and size and reputation an individual thing. This is going to be working hand in hand with governments, with regulators, with central banks, and working across the industry to provide a much more efficient and updated infrastructure. The monopolies of Visa and MasterCard that charge very high take rates to merchants, when stablecoins are deployed or CBDCs are deployed, those rates are going to drop from 200 basis points to maybe 15 to 50 basis points, helping merchants, helping consumers. And so I think technology and the advances of technology done in a responsible and smart way are going to make a gigantic impact on the welfare of our economies.
Thank you, Dan. Merci d'avoir respecté le temps.
Thank you for keeping to your time, Dan. Thank you very much. Okay, don't hesitate to butt in whenever you like. Now I'll hand over to Daniel BIARNEIX with this very simple question. As you represent businesses through your French Association of Business Treasurers, do you sort out the good from the bad? Do you draw a difference between innovative, useful payments and those that aren't useful but are innovative? Thank you very much. Hello, everybody. I think the important thing when answering the questions that Helene has asked is to look carefully at 3 points. The first point is that the technological innovations in finance, in particular in the flows and payments, there's a huge diversity in these flows and payments. We've talked about Bitcoin and stablecoin, about smart contracts. All of this is linked to the blockchain technology, which is probably the most sophisticated innovation, but there are others as well. There are others that you are familiar with. For example, a lot of people have heard or have already used Paylib, which makes it possible to make direct payments from one phone to another, just using a phone number with a bank account behind that number. But that's true that it makes it possible to do an instantaneous bank transfer. There are other things you're familiar with electronic wallets, e-wallets managed by PayPal or by Visa, MasterCard or Apple Pay. That's really for the general public. Then you have other things that are more for businesses, which we call APIs. These are interfaces that can be connected to banking information systems or business information systems to make the transactions smoother and more efficient. The important thing to bear in mind is that there is a lot of choice. At in our association in March, we organized an event called Treasury Innovation Day, where we worked on a lot of fintech with a lot of different treasurers from business. And we had a huge diversity of solutions of technological innovation. When you talk about diversity, you're talking about choice, of course. When you talk about choice, you're talking about different criteria. That's my second point. What are the criteria that a company will select when they want to choose their technological innovations, which they think are going to be useful for them? I think there are 3 criteria, which I put in order of importance. The first one is security. The second is usefulness. And third is cost. First criterion is security. Let's not forget, we're talking about financial flows and payments, therefore, and so we can't take any risks. We have to make sure the money goes to the right place, that the intermediary we're using, because even though it's not a bank, it's still an intermediary. We have to make sure the intermediary is reliable. So the first point is security. The second point is it useful? Is it serving any purpose? Is it going to provide additional services to my customers and increase my sales figures? Is it going to increase my productivity and therefore reduce my costs? And the third point is the cost. Even though is it secure and effective? Is it affordable? This isn't necessarily the case when you're talking about Visa or MasterCard, for example. That's certainly the case. So that's an analysis from the point of view of businesses. Then we have the macroeconomic point of view over these technological innovations. Here we're talking about data which are managed. These are sensitive data about people and their flows. They have to be protected. We have a question of sovereignty. I'm sure you know that most of these major players are American. We're talking about payment flows, and so we can't consider that sovereignty that Europe can abandon. And we also have a question of the economic positioning. With these technologies, the risk we might create dominant players, and in the world of payments, we might create somebody which is similar to Booking.com, where they take most of the hotel margins. We're talking about payments. In other words, everything that nourishes the whole economic environment of the world. So if we look at these 3 points, diversity, the choice criteria, and the macroeconomic impacts, we can try to answer this question. Are there technological innovations that are useful and some others that are less useful? And the answer is, in one word, what's very clear is that technological innovations are necessary, yes, provided they are secure, and so all of the actors have to satisfy the same criteria for security, whether they're banks or not, it doesn't matter. Thus satisfy the same criteria for efficiency and security. Thank you very much. Okay, so we've talked about intermediaries a great deal, which we don't always need. The person representing the intermediaries is my ATIG. It's over to you. Over to you for the defense. I don't have my wig to defend my position. I'm sorry, I have to represent the old world, and maybe I should point out that our banking federation brings together 330 different members in France, many of which are banks who only work online. The only criterion is that you have to be approved as a credit institution, in other words, to meet the criteria of these banking rules, which are the same for the entity that chooses this status. So that means there are a number of operators who, for example, are payment institutions, and there are technological solutions as well, which operate to carry out the technical part of the transaction, but the flow goes through an institution, whether it's payment or not. When talking about fintech, we have a very large variety of different players. The message I want to get across is there's no contradiction between the fact that you're an intermediary and the fact that you're innovating. There's no contradiction. I would say, on the contrary, I would say that today, intermediation today, as it is done in France, what we call banking intermediation, is something that has an additional effect, in addition to what Daniel BIARNEIX has just described, is a question of the mass, the ability to process the mass of transactions. When you're talking about disintermediation, it's the idea that the individual decides by themselves what they want to do from A to Z. And in fact, I won't make any reference to political situation at the moment, maybe more to a broader societal situation. Are we in a world of the individual who decides by themselves on everything they want to do, or are we talking about a collective need and a need to have intermediary bodies and people who represent you who are similar to you in one way or another? So today, the major financial players in France today are intervening in the transactions, in the payments every day, and in the financing. In other words, the supply of money to be able to accomplish your projects over a period of time and to be able to interact on a large volume. Let me give you figures to illustrate this massive data, because this France corresponds to a system which is much more inclusive than the one Dan has described to us. Let me give you a few figures. 99.5% of French people have a bank account. Some of them don't have a bank account by choice, and therefore they are excluding themselves. And the average in Europe is 95%. In the world, you have where the country is only 60%. So in countries where you're talking about digital currencies of central banks, CBDCs, these are countries where you have people have no bank account at all. And so you can imagine the kind of countries we're talking about. 1.3 billion loans to 1,300 trillion loans to companies as well. And so I'd like to add to this 1,100 market loans to companies, in other words, loans directly to companies. That goes obviously through the banks. The banks are active on the markets, but not only in that specific area. So these absolutely astronomical figures, and this intermediation also makes it possible to have a pooling. In other words, a type of risk management where the low cost for the major companies compensate for the higher cost for the smaller companies to have rates which are in France much lower than elsewhere. A third point is the question of savings. In France, a large proportion of savings is intermediated by the state, when you subscribe to your retirement pension or your social welfare subscriptions, the government participates, and you add a little part for the retirement pension or for your long-term investment needs. So savings in France is intermediated by the state and by the banks. This means you have a high level of protection. I'd like to end with a specific point, which is the idea of innovation. Of course, you don't have a choice. We've been innovating for a long, long time. Banks have been around for a very long time. This isn't because they've been protected by anybody, but because this is because of their innovation. This innovation is a demand that comes from customers. So it's very important that it should take place in a framework of confidence and trust. That's a very important point. And the second stage, I'd like to give you some more information. These are points where, when you're talking about the investments you would like to do, you want to have 100% trust and confidence. We are a little bit lower than that, but we're much higher than the most of the other actors in terms of the security of transactions and data. Thank you. Mingpo CAI. I've given you a quick presentation. I've been the founder of CAI Capital, who have invested a great deal in these financial technologies and these innovations. So it seems to be worth investing in these new products. Thank you, Jean-Charles, for inviting me. Jean-Paul, I do apologize. Sorry. We met in Davos a few years ago. I'm sorry for making a mistake with my name. I'll call myself Jean-Paul instead. So the title of this session is a bit of an accusation, really, saying that financial innovation is a problem. Not at all. There's no problem at all. No problem at all with this innovation. At CAI Capital, we have 4 offices in Europe: France, Germany, and Spain, and New York and San Francisco as well. It was created. We created CAI Capital 17 years in France and then in Singapore. We have invested. Today, I think we are the largest innovation fund, tech innovation fund in France, even in Europe. We've just leveraged €1 billion. We've invested about 30 unicorns. There are quite a few of those in fintech. Alma in France, for example, Descartes in France, and other unicorns as well. What I wanted to say, a lot of these players are banks and insurance companies. I don't think there's really any subject really about disintermediation. The question of what is useful for the final customer. All of these tech entrepreneurs, which might seem a bit abstract, but often they're young French entrepreneurs who've come out of the best business schools and have a strong desire want to make life easier for consumers. We have for several million people who can buy paying in several installments. When Chan was created 7 years ago in Silicon Valley, they made it possible for 7 million Americans who didn't have a banking card to be able to have access to financial services. This is extremely important, and it's a question of equality. And today, this application is the most downloaded application by the low-income sector of the population. I think it has a positive impact, I think, is fintech innovation. It's not a question of wanting to eliminate any particular player or anything like that. The idea is to provide the best possible quality of service. You can't stop that. You can't stop innovation. The banks finance startups so that they can provide a better service to their customers, and so the big banking groups and the startups are not in conflict. They are working together in partnership. And in fact, we are investing the fintech fund for BNP Paribas. BNP Paribas has been a pioneer. They want to provide the best possible quality of service to customers. so that young engineers and data scientists can provide the best possible solutions. Ever since we now have these smartphones, everybody has a digital identity, which makes it possible to do many things very quickly at a large scale. And it's not just for young people. In e-commerce too, the payment technology are extremely important as well. And for my last point, we have to encourage.
We never accuse, we do to encourage the young people. If they have ideas that can help today, even older people to improve their living conditions, because innovation is also lowering the costs, it's ensuring quality, lowering the costs, and I'd like to indicate that we see that very well. The population is changing, society is changing. We never forget that there's a middle class in the traditional sense of the word, which is disappearing. But on the other hand, you have the population, the people, who have the right to access dignity, to have quality of service, to benefit from quality of service. If you want to serve the people, then you have to use technology. Thank you very much. Thank you.
Edouard VIEILLEFOND,
Edouard Réfond, the floor is yours. Thank you very much. I have 5 points. First of all, we've heard a lot of technology and progress. Obviously, these technologies represent progress. Progress continues. It's even gaining momentum. It's the only way of ensuring productivity, create wealth. And generally speaking, I think we have to be careful not to block innovations just because there would be retributions in the value chain. Obviously, there are, could be quite violent. We see from finance to technologies, from New York to Palo Alto. We've had that for centuries. It's gaining momentum. We have to be careful. But I think that as far as that's concerned, be careful not to confuse the real regulation issues, laundering, fraud, and to mix up the former incomes, that would. So, on the other hand, once we've said this, there are real topics here to address, and these should be addressed technology by technology. Some technologies don't give rise to that many difficulties, but if we go back to philosophy, well, the Greeks used to say, Plato would have Socrates say that writing would give rise to problems because people would not remember things in their minds. Then we continued, we invented printing, digital solutions, and if we had to talk about technologies that, of course, give rise to a lot more difficulties than, we can spend a few hours. It was done in other roundtables on social networks, for example. There's a way to change our cognition and our social relations that has a very much stronger impact, and that really need much more regulations than for technology. I'm not even addressing the issue of AI. So we want to go from Web 2 to Web 3 because we want to break this easy income. So, in the story of humanity, there's a collective power. Nobody will have rents. I've never seen this in human nature. In particular, in some places that are in the financial sector, banks, asset management, and everything is normal to be regulated. These are priority issues: payment, financing, credit, and everything. You can't just do anything, and it's normal, traditional that we treat with the shortcomings of the market, constrained with problems, negative externalities, as we politely say in economy. We have to deal with that on a case-by-case basis, and it's true that in distributed technologies, we shouldn't have third parties. Well, this is what we used to have in terms of centralization for the supervision and regulation. It's not necessarily bad, but we have to keep a watch on all this. Maya talked a lot about intermediation, so I want to address this. But when we're talking about the system, there are regulations and things to keep a watch on. But when you're really in the nitty-gritty of things and you risk touching the mutualization or intermediation, then questions arise. For example, in banking, if you have a technology that can easily promote methods that kill the normal intermediation. That's what we prefer in Europe compared to the US. That's a real issue, and it's true, and that's my fourth point. It's true that it happens also with insurance and reinsurance. We can imagine that if some technologies favored insurance, the parametric insurance, it's also hopeful. You mentioned the example of Descartes. Of course, we have to continue along those lines, but in the long run, if we segment and if we don't give a strong value to protect it against some perils, well, what will we do? We will demutualize, we will separate the risks, and as you know, in insurances, mutualization and the mass of insured subscribers, it's through the different contracts, and it's mutualization anyway. And the last point that I'd like to raise, because I also represent the CCR, we not only do reinsurance, but we see public insurance for non-insurable claims, you know, that are not covered by private insurance companies. So it's a higher degree of responsibility with the state guarantee. And here we see that the topic that is very important for the demutualization, in our case, it's something else. We are closer to the political instances. It's possible to demutualize and to put our trust in technology when you have a public-private regime that use interministerial decrees to define perils or risks. So it's your turn to address your questions to the panel. I would like to start with my own questions based on my personal experience. I have a banker that I like very much, but when I want to make a payment, they send me figures that I need to recopy on my mobile phone. And inversely, if I use Apple Pay, for example, it's not to replace the intermediate, it's an additional layer, but I just, you know, click with my finger to give my fingerprint, and it's much simpler, much faster. I'm identified, and it seems to be very trustworthy. And you know, I use an American platform, and I feel uncomfortable. Why didn't my French bank have the idea before that? So we're all concerned with this issue of payments. But your part, I think it's 20% of the population that has the chance or enough money to pay an Apple phone. You know, I'm not going to make you guilty. I don't want to blame you because you spend your money on that. But in fact, what you're saying, and I have a checkbook also. Fine, beautiful. But what I want to say is that the question you're asking leads us to wonder, to think about clients, customers. Because you talked very directly by saying all this in the end is to serve customers, is to be useful to customers, and the customers have an enormous, are very diverse. I thank Daniel and the FTE for organizing this Innovation Day, because in fact it enabled to demonstrate the variety, the great variety. So you have a lot of enterprises that don't have treasurer or financial managers or CFOs, but the question is who needs what? And today we answer in a very massive way by saying, well, everybody should have access to Apple Pay and others. But it's not possible for different reasons. Apple makes you pay for that. Oh, there's a cost, even if it's a hidden cost. Of course, well, lucky enough that there's a cost, and that it's paid to Apple or anybody else. But in reality, the issue here is, what are you paying for? What service are you paying for? And I'll bounce off the question by Helene REY. Does everybody need 24 hours a day, 7 days a week to have access to these transactions? Of course, banks, in a certain way, have benefit from a facility and a faculty to work with a large variety of clients and to select their investments. And you've raised a very interesting question: how do we orient these investments? So, in fact, effectively, banks make choices when they look for performing fintech. Well, we take a fund to find who's going to do it. And when you have to choose between offering a 24/7 service to 100% of the client or a hyper-performing client 24/7 service to a part of the client, people choose the second option because you can't disperse yourself. You can't. We don't have the means here. In France, yes, but not in France, not in Europe. We don't have the means to say, okay, I will only invest in innovation. So I think it's a question of choice. Sometimes the clients are international. It's not a question of 24/7. If you're committed, you're committed with customers all over the world. I understand your worries, you know. When you make your investment, you're very careful. But I can tell you, our customer, the banks, insurance companies, and you are aware of all this. For the environmental impact, of course. And the human impact, which is at the center. Today it's a question of tool. Is the tool performing enough to ensure comfort and ensure general health? At CAI, we made the choice to invest not in abstract philosophical things. We invest in the tools. To have a cryptocurrency that is more safer, more secured, and also how we address the different age groups. So we created a fund specifically for that, and with countries that are recognized by the IMF to provide tools to make these tools as human as banks or traditional financial institutions are. That's the future. So if nobody wants to add anything, I will hand over the floor to you, the audience, and who may have questions or. So the first here, front row, can we hand over the microphone to this gentleman? First question. Okay, Pierre Chambradier, I'm an economist, and I'd ask Daniel Bernays, when you talk about security, are you thinking of the security for both parties in the payment, or the private and public security, to make sure that the people who use money for laundering, for example, purposes, all this has a cost for traditional operators and everything, and it has a cost, so that the cryptos don't pay cryptocurrency. So are you thinking of that in terms of security? Yeah, it's both. So that's why I talked about the microeconomic criteria for enterprises, but also the microeconomic impacts. And obviously, the payment as such is something that needs to be managed with the same rules and the same controls in terms of safety between the people and public, whatever the operator, whether it's a bank or a fintech or an operator, what have you. Criteria need to be the same if we don't have to have competitive distortions and ill-managed risks. Yes, question in the front here and the lady in the back. Yes, sir. I have a question for Helene REY regarding the risk on financial stability that these innovations can give us to. Can you explain what you have in mind when you said that? Yes, well, good question. Until now, regulators considered that cryptocurrencies were a bit too small to really create big risks for the financial system. But now, with the development of these stable coins, for famous stable coins, which are assets based on a reference currency like the dollar, and are spanning a bridge between the more traditional financial sector and the new forms of disintermediated finance systems. We see that phenomenon of contagion or instability that could eventually have an impact on banks via exchanges like those I mentioned that are not necessarily entities that are fully transparent. So they can eventually start causing problems. So you have to keep an eye on that as regulators. Also, there are issues with these stable coins as such. We had examples where to have a fixed rate, when you emit a stable coin, on the other side, you have to have exactly the same amount of assets so that it's balanced or considered as stable. And then we saw actors that didn't have the counter value or enough assets to support the value of the stable coins, or even actors that speculated with other cryptocurrencies at the same time and played on the rates, and so that was documented. So in this field, it's a bit of a jungle today, where everything is opaque. We saw spectacular crashes of cryptocurrencies with Terra Luna of the sort. And when it's small and not too connected, well, it doesn't really matter. People do what they want with their money. They can speculate. But when there's a bridge with traditional finance and the banking system, that's worrisome. You have to take a closer look at what's happening. So with these international payments that have developed, we're a bit at this stage. I know there is a question, but I'd like to ask to be patient, because I think our guests here have something to add. Maya, you asked to take the floor, and then I'll hand the floor to you. No, I was just looking for the exact figure of the weight of cryptocurrencies and the assets that were that come from drug traffickers and others. I think that they represent cash that circulated outside the circuit, and crypto assets with a certain number of seizures that triple every year. So very important aspect, and the fight against this trafficking is a major security factor. As I've just made a comment, so that we don't have a confusion on everything, we should never talk about cryptocurrencies. Cryptocurrencies do not exist. They're not currencies. They're crypto assets, not cryptocurrencies. So they don't have the characteristic of a money, of a currency, even if it's a stable coin, because behind that you don't have the required reserve. So don't talk about a currency, talk about an asset. Second thing is that never confuse the crypto asset with the technology, the underlying technology. That's the blockchain. The blockchain can be an instrument that is useful to do intermediations, manage flows more rapidly, but it has nothing to do with what we call a crypto asset. So it's important to establish a difference with that. Thank you. Edouard, you want to add something? Yes, very briefly. In a nutshell, we talked about currencies, pseudo-currencies and everything. And when you have a Bitcoin by itself that varies, well, that was said, the stable coin reminds us of the monetary fund 15 years ago. Or you have the assets or you don't. When you don't, it's a disaster. And in the middle, if you have a basket, for example, you can end up with a system where the tail wags the dog. So this is a comment, and there are three priorities: the financial monetary stability, that's the first. We talked about this. Secondly, is the creation of value. It will exist today. The technologies that pass in the end, they manage, and you recover the value. But in the distribution of the value, will it be captured by the new actors as it was by the GAFAM for Web 2? So there are two underlying questions. The first is the same: will we end up with actors that will, will they change the model in a European zone that doesn't have the same vision of solidarity, whether for banks or insurance? And in the bank and insurance, you can have credits, you have a housing insurance or car insurance that is reasonable. But it doesn't exist thanks to technology. It exists thanks to the mutualization and the compulsory aspect of this insurance. So I'd like to do eventually a survey on this. We could vote. I'd like to have a survey on this, but I promise to hand over the floor maybe for one or two last questions? You wanted the floor. You have the microphone. And Dan after wants to say something. I would like to ask the question to Mr. CAI, because it's true that in France we have the traditional banks and everything, while in Africa, well, it's something that is slowly developing, and maybe financial innovations and digital evolutions can represent a major stake for us in Africa. So what can you say with a view to that, and what are the stakes for Africa? Thank you for your question. 3 years ago, CAI Capital, with the largest African fund, which called Africa Invest, we created CAI Africa Innovation. And one of the key topic of orientation of our investment was in fintech, $120 million in fact. Many French groups, some are present here, participated in this, and it works very well. No, Tony Barry, my associate, is a brilliant financier, and so we have a lot of actions in Africa, and we invested in a company called K2. It's for for lower class population. So, as you know, what's important is to ensure that you are working for the people, and nobody can hurt, can affect you in that way. Yes, Dan, do you want to say something, Dan, please? Do you want to add something, Dan?
Yes, please. I think we're confusing a little bit kind of the where the banking system is, the underlying technology, fintechs. I think every company today is a technology company, and every company needs to innovate as the pace of technology accelerates. I think banks are fintechs, fintechs are trying to be banks, and they're going to start to work together. I believe that every responsible financial services company needs to work hand in hand with regulators. And I think that the regulators around the world, especially in different countries, if you look at Brazil, if you look at India, if you look at South Korea, if you look at Singapore, those central banks and those governments are beginning to put into place public goods infrastructure that run on blockchain that are fundamentally changing the financial system. They're basically trying to tokenize their entire economy. They're putting payment stacks in place that are essentially free. PIX in Brazil is free. UPI in India is free. Those governments are now talking to each other about how can they put their respective payment systems together in an integrated platform through APIs that can enable payments back and forth, not only within one country, but between countries as well. If you overlay on top of that what's going to happen with AI, and I think the next generations of AI are going to be a breakout moment for humanity. I think we are going to move towards API much faster than anyone anticipates. You overlay that on the tokenization of the economy, on top of blockchains, on top of public goods infrastructure, and we are going to see a fundamentally different financial services industry evolve. And this isn't about banks versus fintechs or not respecting the integrity and the stability of the financial system.
Thank you very much.
It's about taking advantage of the technological revolution that's upon us right now.
Thank you very much. Sorry to interrupt. Il reste 10 secondes.
I'm sorry to interrupt. We have 10 seconds to conclude. We're at the end of the session, so I think the panel demonstrated, Manuel just showed this, the extraordinary diversity of this innovation. Dan also in intermediate financing. We talked a lot about payment systems, but several other things. We shouldn't confuse everything. That's really the key message of this session. It's a very rich ecosystem that is developing at great pace, and I think nobody knows exactly where we're going, but nevertheless, thank you for this conclusion. Thank you for being with us.